The worst crash in our lifetime is coming? But what does that have to do with the real estate market? That's today's show. Let's dive into it. Hey everyone, I'm Clayton Morris. I'm the founder of Morris Invest, longtime real estate investor, and this show is devoted to helping you build passive income, and the way that we do that is with buy and hold real estate. So we buy real estate, we get it cash flowing with great tenants, and we hold it for the rest of our lives. That's the whole point of what we do here. It's not sexy, it's not terribly dramatic, it's actually slow and boring, and that's how you truly build fantastic net worth. Hey, a story this week caught my eye from Jim Rogers. Now, Jim Rogers, for those of you who don't know, is a legendary investor. He is, of course, wealthy beyond our wildest dreams. He has been a sage in the stock market. He can figure out what's happening in the stock market, and he's done it effectively for decades. So anytime people get a chance to sit down with Jim Rogers and pick his brain, we definitely want to know what's coming. And he has a tendency to always be right, or more often than not, he's right. He's watching the market and he's knowing what's happening. Well, he made a pretty bold claim this week when he said that the worst crash in our lifetime is about to arrive. Now, this is Jim Rogers. This is not me saying that, but we've had a couple of experts here on the show who've also said similar things, Harry Dent and others. So Jim Rogers, legendary investor, sat down with the folks over at Business Insider. I wanted to play some of that audio for you and video here so you can listen to it, make your own assessment. But I really want you to pay attention to something as you're listening to him. Notice what he doesn't mention. See if you can figure out what he doesn't mention. It's a little pop quiz. And when we come back after the Jim Rogers interview, we'll talk about it and we'll analyze it. Plus, I'm also going to get some analysis with Warren Buffett and some moves that he's making in the real estate world. So here it is. Here's Jim Rogers sitting down with Henry Blodgett from Business Insider. Take a listen.
I've always admired about you as an investor is that you don't talk about what should be. You figure out what is going to be, and then you do that. So what is going to be with respect to the stock market? What's going to happen?
I learned very early in my investing careers, I better not invest in what I want. I better invest in what's happening in the world. Otherwise, I'll be broke, dead broke. Well, what's going to happen is this is going to continue. Some stocks in America are turning into a bubble. The bubble's going to come, then it's going to collapse. And you should be very worried. But Henry, this is good for you because somebody has to report. So you have job security. You're a lucky soul.
Well, yeah, TV ratings do seem to go up during crashes, but then they completely disappear when everyone is obliterated. So nobody is hoping for that. But so when is this going to happen?
Later this year or next.
Later this year or next.
Yeah. Write it down.
And what will trigger it?
Well, it's interesting because these things always start where we're not looking. In 2007, Iceland went broke. And people said, Iceland, is that a country? They have a market? And then Ireland went broke, and then Bear Stearns went broke, and then, Lehman Brothers went broke. They spiral like that. Always happens where we're not looking. I don't know, it could be an American pension plan that goes broke, and many of them are broke, as you know. It could be some country we're not watching. It could be all sorts of things. It could be war, unlikely to be war, but it's going to be something. When you're watching Business Insider and you see, that's so interesting. I didn't know that company could go broke. It goes broke. Send me an email, okay? And then I'll start watching.
And how big a crash could we be looking at?
It's going to be the worst in your lifetime.
I've had some pretty big ones in my lifetime. It's long.
It's going to be the biggest in my lifetime, and I'm older than you. No, it's going to be serious stuff. It's going to be very. We've had financial problems in America. Let's use America. Every 4 to 7 years since the beginning of the Republic. Well, it's been over 8 since the last one. This is the longest, or the second longest in recorded history, so it's coming. And the next time it comes, in 2008 we had a problem because of debt. Henry, the debt, now, that debt was nothing compared to what's happening now. In 2008, the Chinese had a lot of money saved for a rainy day. It started raining, they started spending the money. Now even the Chinese have debt. And the debt is so much higher. The Federal Reserve, the central bank in America, the balance sheet is up over 5 times since 2008. It's going to be the worst in my lifetime too. Be worried.
I am worried.
Good, good.
Can the Fed rescue us? Can anybody rescue us?
They will try. They will. What's going to happen is they're going to raise interest rates some more. Then when things start going really bad, people are going to call and say, "You must save me. It's Western civilization is going to collapse." And the Fed, who's made up of bureaucrats and politicians, will say, "Well, we better do something." And so they will try, but it won't work. It'll cause some rallies, but it won't work this time.
And we are in a situation where Western civilization already seems to be possibly collapsing, even with the market going up all the time. Often when you do have a financial calamity, you get huge turmoil in the political system. What happens politically if that happens?
Well, that's why I moved to Asia. My children speak Mandarin because of what's coming. You're going to see governments fail. You're going to see countries fail this time around. Iceland failed last time. Other countries fail. You're going to see more of that. You're going to see parties disappear. You're going to see institutions that have been around for a long time. Lehman Brothers has been around over 150 years. Gone. Not even a memory for most people. Well, you're going to see a lot more of that next time around, whether it's museums or hospitals or universities or financial firms.
So there you go, Jim Rogers sitting down with Henry Blodgett to talk about the impending crash and where he's repositioning his money. He sees a lot of similarities to things we've gone through before, and he sees a lot of volatility, which is nerve-wracking, especially for those of you who are stock market investors. I am not. As you know here, I've talked about before, we've moved our money out of the stock market into real estate investing, because to me that's one of the least risky investments that you can possibly make if you're doing it correctly, like we teach you here how to do. But I thought it was interesting. He does not mention in that interview at all anything to do with real estate, anything. And then in the same week that Jim Rogers says that, we have another billionaire, one of the smartest stock investors in the world, putting his money into real estate. So this week, Warren Buffett also buying a huge percentage of a real estate investment firm. He bought nearly 10%. So that's incredible, nearly 10% of a real estate investment firm. What was Warren Buffett's reasoning behind this? Well, I dove into his interviews and why he decided to do this. And what he said was that he wasn't invested enough in real estate. And he knew how important real estate is to his company's future and to his company's portfolio of assets. So he went from, I think, like 2% or so in real estate up to 10% of his overall investing strategy. He just bought a whole ton of stock in Apple. He had hesitated to do that for years for some reason in the technology space. He just admitted that he didn't know much about technology. He'd made a lot of money investing in railroads and other places, of course. So he realizes that real estate and the value of real estate incredibly important to Berkshire Hathaway, his company. So investing nearly 10% into a real estate investing firm. That's a huge, huge leap for Warren Buffett into the real estate space. So a couple of other things as we analyze the market right now in 2017 heading into 2018 about the real estate market. And the reason why Jim Rogers didn't bring it up and the reason that Warren Buffett is extremely excited about real estate investing is because the fundamentals right now, people have been saying, oh, is there another bubble coming? And, I'm not an expert in bubble economics, but when you analyze the data, a lot of experts seem to be saying, no, the bubble temperature is completely different than it was in 2007, 2008. What happened then, you had people that couldn't afford mortgages, so they were getting mortgages with no income and no job. Those were called ninja loans that banks were just writing, and people were getting these $300,000 homes. They were moving out of apartments, leaving a lot of landlords in the lurch. That is not happening right now. There's an incredible demand for rental properties. You know why? Because it's difficult to get mortgages, okay? So it's still difficult to get mortgages. You have to show income, you have to show a job, you have to show a good credit score, your ability to pay it back. You can't have any weird anomalies on your credit report, like you just went out and bought a boat or these types of things. So banks have really tightened their belts. So it's incredibly difficult right now to still get loans. Foreclosures are way down. We almost don't have any foreclosures anymore. As I've mentioned here on the show before, I could count on one hand in the past year how many foreclosures I've bought. Usually we used to be able to buy a lot of them. In fact, my first 2 properties that I ever bought were foreclosures. And sorry, it's almost impossible to find them, which is great, especially in the rental markets where we're located, where we buy a lot of properties. So Indianapolis and parts of Michigan and Florida and Pennsylvania. foreclosures have all but dried up, which is good news, right? That means that the fundamentals have returned. We're also seeing appreciation coming back. We're seeing a demand for rentals, and we're seeing overall the excitement from the foreign market coming into the United States. China is slowing. They're being saddled with debt in a way that they weren't used to before. Europe is really slowed down. Japan has slowed down. United States burning and churning. However, watch out for that stock market. Listen to what Jim Rogers has to say, and others. I would love to hear your feedback about this, and please, tell me, where are you putting your money right now? Are you repositioning things in the stock market? Have you pulled money out of it, perhaps into other areas and other zones, gold, perhaps? Or well, I'm just curious where you're putting your money right now. Let us know, and we would love to help you out. So, if you are ready to take action, get started in real estate investing, and you want to find out what your financial freedom number looks like, come on over to our website. Go to morrisinvest.com and download the free freedom number cheat sheet. It'll kind of help you figure out your monthly expenses. Plus, it'll help you also take action to start wrapping your brain around investing in real estate for the first time. So there you go. Two experts, Warren Buffett, Jim Rogers, kind of excited on real estate, not so happy right now with the volatility in the stock market. I would love to hear your thoughts about it. We'll see you next time, everyone. Thank you so much for subscribing. Now go out there, take action, become a real estate investor. We'll see you next time here on the show. Much love to you all.